All right, all right. So this is what we're going to be covering today. We'll be covering what is a currency pair, what is the major pair of the currency pair, what is a minor pair of the currency pair, what is a Japanese candlestick, what is a trend line, what are support and resistance lines, and what is a pip. So this Forex is obviously the biggest financial market in the world. Banks use it to trade foreign currency from country to country, and in between that transaction, somebody gets paid. So I'm here to this the beginning courses of how to actually read the charts and what to look for. So I'm gonna start with a currency pair, because a currency pair is really how you make money in the Forex market. Currency pair, crypto, you're going to hear those terms interjectionally. So a currency pair is usually, you're going to erase all this now that we know what we're going to do. All right, so we're going to do it this way. All right, so what is a currency pair? So this will be a example of a currency pair. Euro, these are going to be like the most famous currency pairs that people use. USD. So how you read that is Euro USD. So it's the Euro versus the US dollar. So that is what a currency pair is. So how you make money with this is, I'm gonna go into buys and sells as well. So the major pair will be euro. So it'll be the first part of the currency pair is going to be the major pair. The minor pair is on the back of the pair. So the back of the pair is called the minor pair. So, but these both can affect the currency pair as far as going up or down. So how I like to look at it is they play tug of war with each other. They have the euro. If the euro is strong, which means it's going to push this currency pair up, which means you want to get into a buy. So buys go up. Buys mean price is going up. And sells mean price is going down. So these are how you actually make money with our buys and sells with the currency pair. So the currency pair, you can do it. I mean, I'm just going to use Euro USD because it's the easiest, but there's like 85 currency pairs and I think 40 cryptocurrency pairs. But you're going to find out what type of trader you are once you get started. Once you actually start trading, you're going to see if you're going to be a scalper, which they basically are in for a short period of time. They collect their money and then they get out of the trade and then they're done. then there's going to be something called a swing trader. A swing trader gets in a trade for long term. So it means they sit in the trade, in profit until, they feel that they need to take profit, but they usually in it for long term, maybe like days, sometimes weeks, and sometimes maybe just, a half a day or a couple hours, so those are the type of traders that you're going to run into. Are going to be swing traders, scalpers, and intraday. Intraday traders are in for maybe like 3 hours out of the day. So those are going to be intraday traders. So either you're going to be a scalper, intraday trader, or a swing trader. I am a scalper. So I basically, look for long moves in the market, and capitalize on them, and then I'm basically done trading for the day. So you always want to come up with a trade plan. So a trade plan basically is going to be what pair you're going to trade that day. Whether you're just going to do buys or you're just going to do sales on that currency pair. What time of day are you going to be trading? Do you have a set time that you trade? Do you just trade? I just trade around the news. Because my strategy works around the news. And I'll show you that a little bit later. So euro is euro versus US dollar. So if euro is weak, that means euro USD is going down. And if USD is strong, that means this pair is going down, because this is that's how they actually read the minor pair. The minor pair usually goes the opposite of what the major pair would do. So if USD on the minor pair was down, which means euro would be going up. So which means euro USD will be super strong all day, which means it'd be going up all day if euro was weak, if euro was strong and USD was weak. Interject if you have any questions as well, because I know I could go and I can go nonstop with this, but you gotta have to stop and ask to see if you have any questions, or just let me know, and I could definitely answer those for you. So the Japanese candlestick. So here's what a Japanese candlestick looks like. I'm going to draw a Japanese candlestick on the board. So all right. Yeah, some go like this. This is what they look like on the board. Not exactly like that. It looks a little bit better than this, but this is what they look like. Japanese candlesticks look like this. This is what you're going to see in the market. You might see one like this. Might see one like that. All right, so this right here, this is considered a wick. So that's where price actually reached and rejected. So it rejected around, you would say it rejected around this zone right here. But this is considered a wick. That's considered a wick. This right here is considered a candlestick, a Japanese candlestick. This is what. So that's a Japanese. This is what a Japanese candlestick looks like. I'm gonna show you how it looks like actually on the chart. I just wanted to draw them out for you, because we go once I get into trend lines and support and resistance lines and stuff like that. I'm gonna go on the chart and show you how it looks. But any questions so far about major minor pairs, about currency pairs, anything? Because this is basically, these are the tools that are going to help you make money, is the currency pairs, because that's what we trade. Major pairs and minor pairs work opposite of each other. Yes, they work opposite of each other. So when one is up, when one is up, the other one is pulling it down. And if they're both like strong, then it's going to be in consolidation. I'll show you what consolidation looks like as well when we get to the charts. I'm about to flip to the charts right now, actually, because that just shows my presentation for candlesticks and wicks. So that's what a Japanese candlestick consists of: is a candlestick body with wicks at the end, and wicks are usually where price reached and rejected. So you would say that was a support line. I mean a resistance line, and then your support line will be down here. The support line will be down here. But I'm about to get on the chart and show you what it looks like. Right. All right, so these are the Japanese candlesticks. This so how you read this chart, actually, it could get a little confusing, but I'm gonna break it down to you. I'm gonna break it down to you. Let's see here. Get back to the screen real quick. All right, so this is right here is the currency pair right here. You're gonna see it right here in the left hand corner. This is USD Cad. So it's USD versus Cad. So the USD dollar runs this pair, but CAD also affects the pair as well. And USD CAD, but right now looks like it's gonna be in a sell because it looks like it's had a line of resistance. You'll understand what I mean by line of resistance when I show it to you. If you see a lot of these lines on my screen, the purple ones, the pink ones, those are line of resistance inside of the actual of other time frames. I'm gonna show you what time frame is. Jeremiah Paris work opposite. I'm still on the first screen. Okay, appreciate you, man. Yeah, new share. There we go. There we go. Should be able to see it now. All right. All right. So yeah, so this is USD versus CAD. So USD CAD is what we call it. One of my favorite pairs. I usually mostly trade this one around the news. So quick nugget, I know you probably more likely taking notes because I know that's how you go. But write this down. The news affects the market in a major way a lot of the times, because the news is usually how the banks come up with their financial statements and stuff like that. And I can show you an actual website that you can go on and find out about the news. This is how I trade. I trade around this forexfactory.com. I want to write it down. Forexfactory.com. So forexfactory.com. You want to go here and you see folders. Folders pop up. Let me share a screen just to make sure you can see it. Yeah. You got a Google? You sure? Come on. So we got to pop. All right, so these are considered folders, news folders. These folders is what I trade around. But I didn't trade today because these folders are not really volatile in the market right now. Because what you're going to see is these yellow folders right here. They are minor pairs. These are the minor, news. And the orange folders are medium volatile on the news. But what you're looking for is the red folders. This is what the red folders look like, and I usually just trade around these times. So GBP, that's a currency. It's not a currency pair, but it's part of a currency pair. So GBP, whenever this news hits, is going to be a huge move in the market. That's usually how I make my money. And I'm done trading for it today for around that time. And then I wait until 9:30. AUD, it's another part of the currency pair. It's usually going to be a big move in the market then as well because of that red folder. Because of the banks and financial statements, wage price index, average earnings index. So these are basically the banks reporting their statements during the year, during the day, and they usually have them just about every day. See, Wednesday you got CAD at 8:30, so I'm trading USD CAD, and then you got USD at 8:30 as well. So that's why I usually trade USD CAD, and more likely the market will jump and it will, go up tremendously or down tremendously. So that's what I trade around is the news. So I'm a fundamental trader. Technical analysis traders usually mark up charts. They go by um, patterns in the market. So we was talking about the chart. So the USD CAD is up here over here, and it says USD dollar, US dollar with versus Canadian dollar. So then you're gonna look at this D right here. This D right here means this is day. So these are day candles. So these are what is during the day. So what you can do is break down the day. If you want to look inside of the day candle, you go inside the 4-hour candle. So these go by time frames. So you got 1 minute, 3 minute, 5 minutes. So every 5 minutes or every 15 minutes or every 30 minutes on these charts, a new candle forms. So if you look on the daily candle, it's red. So it basically is going down. So it more likely will go down throughout the night. It might go back up during the news. You never really can tell. Usually people go by market structure. I usually just trade around the news when it comes, catch that big move, and then finish trading. So this is USD CAD. So we're gonna talk about resistance and support lines. Resistance and support lines are usually where price rejected last. So as you can see, this pink line right here, has multiple places where it rejected. So you see it goes down. Let me get my drawing tool. Yeah, so let me get my drawing tool. So I need to make that yellow. I'll make it yellow. I'll make it white. Let me do that. what I'm gonna do is I'm gonna pick another currency pair, because this thing I don't want to confuse you with all these pink lines. So let me do another currency pair. USD JPY. All right, yeah. Okay, I'm following. All right, good. I'm glad you are following. Yeah, because I didn't even get to ask you, like, what is your, basically what have you been learning, then. So I'm just hopping into it, man. As long as you following and you getting some good content, we good. So we're looking at USD JPY. So it's the US dollar versus the Japanese yen. So I got lines of resistance already on the daily. Let's bump down to the hourly chart. Let's bump down to the hourly chart. See what the hourly looks like. So look, we're looking at the hourly chart. And when I'm looking at this, I look for different patterns. Like I call them the M and W pattern. So usually the market does the same thing. So either it's going to be an M pattern or a W pattern. And I'm going to show you lines of resistance just by looking for M's and W's. So here goes a horizontal line that's going to mark a resistance line. Resistance meaning the ceiling. So I like to call it the ceiling and the floor. So usually where price rejects, there's a ceiling or a floor. So which means that's where price rejected last, and it probably will reject there again. We'll probably reject there again. So that's this right here, the top yellow line. Well, I just did another one, but I didn't mean to. I can just move that one up. Move that one up to the next rejection line. Will be like right there. Like right there. All right. All right. So the line of resistance will be this would be the floor down here. This is called the floor. So see how price dropped, boom, played around with this area right here, went up halfway, probably about 50%. We'll get into retracements as well. Then went back down to this line right here. So this has been a good entry, re-entry right here. Because that it pulled back to there and went up. So it's making a W formation. So usually you can catch probably like if it's not about to reject again because that's where it rejected last, it's around a rejection zone as well. This is considered a rejection zone because that's where the wicks have been hitting. You see where the wick hit right here? That hit, so which means around this area, there is a rejection zone. Let me move this line down here where, potential. So those in between here is potential rejection zone. So which means it's at a rejection zone right now. So line of resistance. So that's a line of resistance and support. So this is support and this is resistance. And the numbers on the side over here are normally the where price is. So it's they're called pips. So when they say, "Oh, I caught 30 pips this morning," or it's a lingo saying a pip is price entry point. It's called a price entry point. So that price entry point meaning you enter your price, and if you're in at the right entry point, you can make money. That's basically what that is. Because it's all about entry, knowing what trend it is. See, right now it's a downtrend, so it's a downtrend on the hourly, but it could be about to reverse. I say that, but we will see after the next couple hours hit, because if it breaks that, that floor, that ceiling that it's at now, because he has rejecting and it keeps on bouncing back off of it, that is actually, if it goes through that ceiling, that line of resistance, um, then it's basically gonna reverse and go up, because it already rejected twice. They call that a double bottom. They call it a double bottom, but I call it a W formation, which is the same thing. Just gotta, let's see here. So, because it tapped the line of resistance twice, so see, it made a W formation, and more likely it will hit around this area and maybe reject again. That's how I feel. But right now, it looks like it could be a reversal pattern. But right now, it could either do that, or it could continue to go up. But then it will more likely, when it goes up, it will come back down and check this zone and continue to go up. Maybe, you know what I'm saying? See how it looks like geometry. Basically looks like geometry. You basically looking for different patterns and triangles and all type of stuff you look for in these patterns. So what I would call a M formation or M pattern would be this. Is already in a downtrend. Usually M patterns form the downtrend. So we're going to go here and do a line of resistance here. Well, I'm gonna change the color just so. Yeah, I'm gonna change the color so we don't get confused. I'm gonna change that to red. All right. All right. So yeah, so it look like price is still playing around with that zone. Um, so I mean, if it busts through that zone, then it's clearly gonna continue to go up just about all night. The USD, Japanese yen. I might even get into that. 'Cause it looks pretty good. Well, yeah, it look like it could break through it, but you never know because it could reject. I mean, that is the hour time frame. But if you have any questions, man, I know I'm blabbing on, but let me know if you have any questions. No questions yet. Okay, good. All right, all right. Moving right along. Uh, all right, so how you do trend lines? So we'll do trend lines now. You see the pattern. Yes, yes. All you gotta do is have an eye to see the patterns. Once you see the patterns, then major money can be made. Will be made. All right. So now what I was doing, show you the M formation now. change the color of these arrows to. There we go, like that. All right, so the information is like this. You see, what? What? It's doing some funky stuff. All right, so the informations do this. And then boom, you see that? It did the big drop. That's the information. And you see those form on you usually see those form on a ceiling. Like a line of resistance is ceiling and a line of support is the floor. So like when you see it bounce off the floor, that means it's about to reject and go up because it's doing a W formation. That's usually a reversal pattern. And the M formation, you just want to look for the M's and the W's. Some people just trade off M's and W's, you know. They basically look for this go up, maybe see what it does, go back down, and if they see it retracing up, they more likely will, see about getting into a sell right here. Like if whoever got into a sell right here was on point. Because boom, it dropped. And here's how you measure pips. They have a tool on here where you can measure pips. You hit this ruler on the left right here, and then you measure from top to the drop. And how you read that is 101 pips. So it dropped 101 pips. So I could teach you how to calculate pips as well. Oh, yes. What is a lot size? That is very crucial as well when it comes to trading. So a lot size all right. All right, so we're gonna clear this. All right. So what is a lot size? What is a lot? So a lot size is gonna be your leverage. So how I really explain leverage is basically how you're able to do buys and sells without having that type of currency. You're basically gonna have your own, your US, Euro, some people load their account with euros as well. You can trade with euros. But we're talking about the American money right now. So you could actually, when you load your broker account, because you load that broker account that we set up, you're gonna load it with American money. You put $50 in, $100 in, whatever. But the lot size is how you're also gonna make money as well, because you're gonna leverage. What it is leveraging the money in your account of something for a larger gain. I like to say, this is how the banks make millions of dollars. Is usually they put like a high lot size. So this is what the lot sizes usually look like when you're trading. Usually a standard lot is 0.01 to 0.10. So 1 cent to 10 cent is basically like a standard lot. And that's usually calculated by, I just do it with the 1 cent. The 1 cent usually converts to 10 cent. 10 cent per pip. And a 10 cent actually converts to $1 per pip. But it really depends on the broker. So this is what your lot size is gonna look. So it's gonna look like this. When you're trading, it's gonna look like you're trading Euro, USD with say a 5 cent lot size. And whatever you get in a buy, which means it's going up, and sell means going down. So you can get a buy or sell on Euro USD. But if we get back to the actual chart on, let's look at Euro USD actually. And you're gonna want to, in your trade plan, you're gonna want to choose which pair that you're gonna use the most. What's gonna be you want to at least, choose at least 2 pairs that you're gonna, continuously, study and trade, because every pair moves different. Every pair moves different. So we can go to Euro USD since we're talking about it. All right, so from what I'm looking at on the hourly time frame, it looks like it's gonna be a drop soon, because at the M, I'm looking at the M's, baby, the millions. All right, so the M formation, it could be a triple top or we call them triple tops. You can do triple tops or a double top. And I'm looking at this. I'm looking at it like this. It might bounce. Might bounce off of this zone right here. It might go here. It might drop there. That's what I'm predicting. Because you really can't predict the market, because it does what it wants to do. But they do go by market structure. So that'll be market structure. So that'd be considered a triple top. Let me do a line of resistance as well. See about a line of resistance. Let me know if I can answer any questions. I'm here to answer questions. Here to give value. Here to make sure you understand what I'm saying. Okay. All right. So boom. I probably do like that. Boom. So those are line of resistance. So it could come back up here and touch this line of resistance right here, or it could continue to go down. That could be the shoulder. They usually call this a head and shoulders pattern, and it's usually about the reverse. So it's been going up, 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 and then it hit it hit this zone of resistance right here. So it's probably continues to go down. Any questions so far? About that. So now we can wrap it up and then continue tomorrow. And I have some more stuff to present to you tomorrow as well. If you want to do it tomorrow, you can do it another day this week. Just whenever you're free. You're trying to get it in so we can knock out as much information as possible. Chat. Oh, for the last one for the Euro USD. Okay, I'll show it again then. Cool. All right, yeah, I didn't even see my little chat box on the side didn't blink. So okay, so I will share that screen again. All right, let's share that screen again. Share. Okay, what are we looking at? I want to show you the pattern on Euro USD. I already drew it out for you though, so that's good. So, alrighty, so this is what we're looking like. This is what it's looking like. There we go. Cool. All right, so this is Euro USD. So it looks like it's gonna be a major drop soon. It could play around with this zone up here again. I believe it will go up to that zone again, or it could just drop. You never know what the market's gonna do. So this is called a head and shoulders pattern. Usually it looks like an M, a triple top. They call it triple top. They call all type of stuff because it looks like an M. It looks like a head and shoulders pattern. And this right here looks like a W pattern right here. Look at this one, looks like a W pattern. Let's see here. It's just really all about, geometry. Nobody like geometry. Nobody like math, period, man. But there you go. So that's a W formation right there. W, boom. You always want to catch it on that. All right, so what you're looking at is the W to M's. I showed you the W to M's. I showed you what a pip is. I showed you support and resistance lines. I didn't show you the trend line yet. I'm gonna show you the trend line, and I'm gonna also show you what they call a pullback. So all these is considered this right here, the actual last part of the W going down is considered a pullback. So all of this is considered a pullback, meaning it's retracing. You don't hear retracing, you don't hear a pullback. What else they call it? They call them flags. Like it looks like a flag. See, looks like a flag. And then continues to go up. So this zone right here is called a pullback. That's all one pullback because it was going in one direction, which is up. Then it pulls back, continues up, plays around. And see, it says plays around with this zone right here because it hasn't breaking this level yet. Haven't fully broken this level yet. So which means it's still it's about to go in a downtrend. It's been going in an uptrend. See, so it's been going in an uptrend since right here. So I'm gonna do trend line. I know I got a lot of lines on here. Let me pick another color. I'm gonna do a yellow line. Should I do a yellow line? Yeah, I should probably do a yellow. So ever since this happened right here, it's been in the uptrend. You see that? That made it in a downtrend. You see that? And then that big move down, it's on the hourly chart too. That big move down, this is considered a pullback right here. This right here is considered, all this right here is considered a pullback, and then it continues down. So the key to it is to, let that big move happen, and then either you can get in a buy right here and let it pull back, and then boom, get in a sell, or you could just plan to get in a sell. Because it's sell right here, you're looking for it to pull back up here, and then sell. Like, that's a big sell. Let's see how many pips that actually is, man. That's actually a bunch of pips. Let's see. Let's measure. It's all about measurements and mathematics when it comes to trading, when it comes to Forex. All right. So we're going to do from here. Say you got in at this resistance line and you rode it all the way down. Say you're a swing trader. This would be a good swing trade, see? That's 127 pips. 127 pips. That's pretty. That's beautiful. All right. So yeah, the key to it is to get in right here. So if you know that this line is a line of resistance, you can even say that was a line of resistance because of that long wick that happened. It rejected up here and came back down. That was more likely the news. That was probably actually a news candle. I know my news candles. That's probably a news candle, definitely. So this yellow line right here is considered the trend line. It's on an uptrend. So all you want to do is get in the buys. So, but it did that. All right. So yeah, the yellow line is a trend line. So when you definitely want to trade with the trend when you trade. You trade against the trend, have a strategy to get out or a strategy to take profits or whatever, because you don't ever want to trade against the trend. Any questions? Any questions? Okay, cool. What's your question? Go ahead. Go ahead and post your question. I see the trend line is going up. Would you expect it to go up and down to kind of correct itself? Yeah, it's always gonna, it's not gonna just go up. So that's what we call it the pullback. Um, and when it's going up, all you want to do is look for a reversal pattern. You can look for a reversal pattern and it will show you that it's so say you're looking at it as, say this over here hasn't happened yet. This over here has happened, but then as you can see, it rejected the trend line. As it rejected the trend line, it also this is called the energy point right here because that's where the trend line and the resistance cross. So that's why that was a big drop. So either you could have collected 30 pips right here on the drop and take your profits and then waited for it to come back up to this zone and put in another sell right here and boom, it dropped again. See, so more than likely it's going to be doing the same thing. So more than likely it's going to go up to this zone and then drop again. Now unless it has some crazy news and it just continues to go up past that zone. But that is the zone of resistance right now. So that's what it's playing around with. But yeah, so it's gonna reverse more likely tonight. It's gonna reverse and then go down. Because see, it's gonna do this. It's more likely gonna do this. Boom, could create the bounce off this zone because that's a zone of resistance right there, as you can see. See, always want to look left when you trade. Look left and see what happened. So around this area right here is where it's gonna either either it could continue to go down that zone or it could come bounce off that zone and it still could continue to go up. You know, you just really got to secure your profits or basically what you're going to do throughout the night. So what I'll do is I'll just mark up the charts now and I'll just put in orders. I'll show you what orders are. You're going to learn how to do buy orders and sell orders, meaning the trade isn't active yet. It's basically like you're going to go order something from McDonald's and you haven't gotten your order yet, So it's the same thing. You're gonna put in an order that you wanna sell at this price. Say you want to sell at 1.12546 and it hasn't activated yet. But when price goes up to that zone and hits it and then bounces back down, you're gonna be in profit. All right. What's a good time for you tomorrow, man? We're gonna hop back on here tomorrow and do some more. Just have your questions ready as well for me tomorrow. 'Cause I know you probably more likely gonna be doing some more research on it. So yeah, just shoot me some questions tomorrow, and we could definitely hop on a live training again. So we could definitely show. I want to show you a little bit of some advanced stuff. I want to show you my strategy. My strategy is actually on my YouTube as well. Tomorrow, 7:30 or 8. Okay, yeah, 8 sounds good, man. So that's what we'll do tomorrow. We'll hop on here tomorrow, and I will see you tomorrow. We want to get that. If you want to get MetaTrader 4, we can hook up MetaTrader 4 to your broker tomorrow as well. It's really easy. What you do is once you go log into Hugo's Way, if you wanna, you go to create account in Hugo's Way. Once you create an account, they'll send you a login for MT4, and then you'll I'll show you how to put that login in. We can go through all that tomorrow.